All right, get ready to dive deep into the world of Lazard. You've given us their 10Ks, and let's be honest, those filings aren't exactly beach reads.
They can be a bit daunting, to say the least. Lots of dense financial jargon and legalese.
That's where we come in. We're here to crack the code and extract those golden nuggets of insight. What does Lazard actually do? How do they make their money? And what's their game plan for the future?
It's easy to assume a firm like Lazard is all about those billion-dollar deals you see in the headlines. Mergers, acquisitions, the works. And while that's definitely a major part of their business, these 10Ks reveal a company with surprising depth.
Okay, let's unpack this. When you hear Lazard, what's the first image that comes to mind?
For many, it's probably the epitome of Wall Street. We're talking mahogany-lined boardrooms, power lunches with CEOs, maybe even a deal sketched out on a napkin.
So not entirely off base then, but where does that perception miss the mark?
What's fascinating is that Lazard isn't just a one-trick pony. They actually have two major lines of business: financial advisory and asset management. And while they both operate in the realm of high finance, they're distinct animals.
It's like having a strategic mastermind and a financial wizard at your disposal. Assuming, of course, you can afford their fees. Speaking of which, how does Lazard actually get paid for all this financial maneuvering?
Yes. The million-dollar question, or perhaps, in Lazard's case, the billion-dollar question. In the financial advisory realm, it all revolves around those high-stakes deals we mentioned. They're the architects behind mergers, acquisitions, restructurings, and even advising governments on their financial strategies. Their compensation is primarily fee-based, tied to the successful completion of these transactions.
So the bigger the deal, the bigger the payday.
Precisely. But here's where it gets interesting. The 10K highlights the inherent unpredictability of this revenue model. It can be quite, shall we say, erratic.
Erratic. Do tell. I'm intrigued.
Well, because their financial advisory income is directly linked to deals closing, their revenue streams can be inconsistent. A flurry of major transactions in a good year can mean a windfall for Lazard. But if the deal flow dries up...
Let me guess. Those power lunches start losing their luster pretty quickly.
You could say that. That's where the asset management side of their business comes in. It provides a crucial counterbalance, a source of recurring revenue that's less reliant on those big, splashy deals.
So, while the deal makers are chasing the next big merger, the asset managers are calmly growing their clients' wealth. Who are these clients, by the way?
We're talking about major players in the financial world. Pension funds, sovereign wealth funds, those massive pools of capital managed by governments and even high net worth individuals. Essentially, anyone with significant assets who needs a steady hand at the helm.
Makes sense. But how do they actually make money on that side of the house? Do they just charge a flat fee, like a retainer?
It's a bit more nuanced than that. They earn management fees, which are typically calculated as a percentage of the assets they manage for their clients. So the larger the fund they manage, the higher the fees they collect. And, of course, they have a vested interest in making sure those funds perform well.
Right, because their own compensation is tied to their client's success. It's a pretty sweet deal if you can consistently deliver those returns. But even with that steady income stream from asset management, surely there are still risks that keep Lazard's executives up at night.
Absolutely. The 10K doesn't shy away from outlining potential pitfalls. One of the most prominent is competition. The financial services industry is incredibly competitive, and Lazard operates in a space where they're constantly vying for clients and deals with some of the biggest names in the business.
It's a cutthroat world out there. They can't just rest on their laurels and assume those clients will stick around forever. What else? What about the global economic climate? I imagine a downturn could throw a wrench in their plans, especially given their reliance on those big-ticket deals.
You're spot on. Economic volatility is a significant concern highlighted in the 10K. A global recession, for example, could lead to a decline in mergers and acquisitions activity as companies become more risk-averse. This would directly impact Lazard's financial advisory revenue.
And on the asset management side, I imagine investors would get skittish, potentially pulling back on their investments, which would shrink those management fees.
Exactly. A downturn can create a ripple effect throughout their entire business. And speaking of potential disruptions, the 10K also dedicates a significant portion to cybersecurity risks.
Now, that's something you don't see every day in the company's annual report. Why the emphasis on cybersecurity? What are they so worried about?
Well, consider what's at stake. Lazard handles incredibly sensitive financial data for its clients. A breach could be catastrophic, not just financially, but reputationally as well. They even outline a scenario where a sophisticated cyber attack could disrupt their operations, potentially impacting their ability to execute trades or advise clients.
Okay, that's a chilling thought. They're clearly not taking this lightly. But it begs the question, how do you even begin to prepare for something like that?
Yeah.
It's not like you can just build a bigger vault.
You're right. Cybersecurity is an ongoing battle, a constant game of cat and mouse. The 10K highlights their investment in robust cybersecurity infrastructure, but it also acknowledges that the threat landscape is constantly evolving.
So they're essentially preparing for a threat that's constantly morphing and becoming more sophisticated.
Precisely. They have to stay ahead of the curve, anticipating new vulnerabilities and investing in cutting-edge technology to mitigate those risks. It's an ongoing process, not a one-time fix.
It makes you wonder what kind of resources and brain power they're dedicating to this behind the scenes.
I'd imagine it's a significant investment, especially when you consider the potential fallout from a successful cyber attack. The reputational damage alone could be insurmountable.
It's a high-stakes game they're playing. So, with all these potential risks on the horizon, fierce competition, a volatile global economy, and the ever-present threat of cyber attacks, what does the future hold for Lazard? So they've got these potential storms on the horizon. How do they plan to weather them? Any hints in the 10K about their long-term game plan?
Well, despite the risks, there's an underlying current of optimism in these filings. They're placing a big bet on the increasing value of expertise and global reach in the future of finance. Almost as if they're saying, in an increasingly complex world, experience and connections are more valuable than ever.
So in a world that seems to be getting more chaotic by the day, Lazard is positioning themselves as the steady hand guiding the ship.
Precisely. But the billion-dollar question is, will this strategy pay off?
Well, that's what makes it so interesting. The 10K gives us a glimpse into their mindset, the challenges they foresee, and their intended solutions. But as with any good story, there are always plot twists.
Absolutely. And that's what makes diving into these documents so fascinating. We get to peek behind the curtain and see the inner workings of a major player in global finance. It's not just about numbers, it's about strategy, vision, and understanding the forces shaping the future of an entire industry.
Speaking of strategy, they mentioned ESG investing several times. That feels significant, almost like they're putting a stake in the ground, saying, this is the future of investing.
Yeah.
What's your take on that?
You've hit on a key element of their future strategy. They're betting that investors, especially the large institutional ones, will increasingly prioritize environmental, social, and governance factors when making investment decisions.
Okay, so break this down for me. We've got a company like Lazard, steeped in tradition, dealing with high-stakes finance, and now they're diving headfirst into this new world of ESG. Seems like a bit of a departure, no?
It might seem that way on the surface, but when you think about Lazard's strengths, their deep understanding of global markets, their ability to assess risk, and their long history of advising corporations and governments, it actually makes perfect sense. They're positioning themselves to be the go-to experts in this emerging field.
So they're not just riding the ESG wave, they're building the surfboard.
Exactly. And the 10K hints at how they're doing it. They're integrating ESG considerations into their advisory services, helping clients navigate this complex landscape, and developing investment products that align with these principles. They're betting that their clients, particularly those large institutional investors, will need guidance and expertise as they navigate this evolving world of ESG-focused investing.
This has been an incredible deep dive. We've gone from billion-dollar deals to the nuances of ESG investing, all through the lens of Lazard's own 10K filings.
Right.
What's the key takeaway you hope our listener walks away with today?
You know, it's easy to dismiss these financial documents as dry and inaccessible, but what we've uncovered today is that they're anything but. Lazard's 10K provides a fascinating glimpse into the company's DNA, its priorities, its vision for the future. It's a reminder that behind every balance sheet and income statement, there's a story waiting to be told. A story of strategy, ambition, and adaptation in a rapidly changing world.
And on that note, we'll leave our listener with this. What other stories are hidden in plain sight, waiting to be deciphered? Until next time, keep exploring, keep questioning, and keep diving deep.